In the 1980s, there was a mechanism called the ERM, or the European Exchange Rate Mechanism. And this is where the European currencies, we didn't have the euro then, agreed to trade within a band, right? High and low between all the currencies. And the British pound at that time was part of the ERM. Now, there was this hedge fund guy who came along and he was like, geez, he says, the British pound is overvalued by 30%. So he went out and started shorting the British pound. So Soros and his quantum fund, they shorted, borrowed billions of pounds, sold them on the market, a short position, betting the value would fall. As the pressure mounted, the Bank of England spent billions of its reserves and raised its interest rates from 10 to 12%. And then when that failed, they had the big day and they announced a jump to 15%, an attempt to lure investors to keep their money in pounds and stabilize the rate. These failed. And the pound then led to a steep devaluation, 15% against the German mark, 25% against the dollar. And on that Black Wednesday, Soros reportedly profited about $1 billion that day. Now, today, people believe the Argentine peso is about 20 to 30% overvalued against the dollar. All right. And Barclays says the peso should be 30% weaker, and there's other people who think it should be 20% down. So, very similar in the scope, percentages that people expect on a certain currency. So now, after we announced, Percent announced the deal that we will unconditionally support the peso, yesterday it got hit. The peso plunged more than 6%. And then they said, look, we're going to do whatever we can to do to prop it up. It did come back up. It closed down 1.6% for the day, but the Argentinian stocks went down 7%. And their benchmark U.S. Treasury, not U.S. Treasury, excuse me, the Argentine Treasury had to raise their rates by 1 percentage point to 12.3, very similar to what the Bank of England was doing, okay? So you can stop and read this, but basically what the market is saying is, yes, Percent has said this stuff, but there's been nothing concrete behind it. So no one really knows what is going to happen, whether the United States is going to do this, and if we do it, if we're going to put any kind of guardrails on this, because so far there are no guardrails. And so they say they have not seen the details of the bailout and if they even might materialize. And then Malay, a libertarian economist, remember what libertarian mean? They don't borrow, they don't want help from anybody unless it's other people's money to bail them out of their bad policies. But whatever. It's great to be a libertarian when you're talking about theory. It doesn't work in the real world, all right? So listen, they've already covered their 26 financing needs through three possible support mechanisms meant by Percent: a $20 billion currency swap line, the U.S. purchase of Argentine sovereign debt, and the direct currency purchases using the U.S. Treasury Exchange Stabilization Fund. And the guys here in the end says, look, you can have a bazooka, but have no intention of using it. That's what's going on in the market right now. Now, this paragraph is actually very interesting, okay? Because, everyone's wondering how much money is in the exchange stable, the ESF, we'll say, okay? And doubts about the seniority of U.S. debt over other debt. Now, think about what they're saying here. These guys are totally in debt. They can't pay the interest on their debt. And we're now giving them another $20 billion. So the question is where does our 20 billion? Is it over everybody? Is it under? Is it next to it? We don't know, okay? And if it's over, then all those people on that other debt, they have rights too. So how's that going to work out? Then they noted that China has an $18 billion swap line, which $5 billion has already been used. And we're telling them, think about this. We gave them the 20 billion. We want them to take 5 of the 20 to pay off the 5 to the Chinese and then get rid of their currency swap with the Chinese. They're not going to do that because they don't have anything else, all right? And the last line here, Argentina owes 290 billion to foreign lenders. 290 billion. So finally, we're seeing some opposition to this, and this is coming from Republican Senator Chuck Grassley, who saw what I saw was we gave them $20 billion, and the next day they sold soybeans to the Chinese at a discount, and it raised them $7 billion in hard currency, but the U.S. soybean exporters were out of luck. So in the first paragraph here, they point out the phone with the text on it that we talked about yesterday. And then an economist down in Argentina said that, hey, they bought 2.2 billion in the last week. So they're spending the money to keep the exchange rate 30% higher than it should be. And here's the best line of the day. As the saying goes, there's no atheists in foxholes, and there aren't many libertarians in a financial crisis, right? He's a libertarian in Argentina, and we're his piggy bank in America, okay? So this whole paragraph here in the middle, you should read. They've now scored two big financial support packages in 25, 20 billion from the IMF, which we forced the IMF to give, with a generous front loading of 14 billion and a $20 billion swap line. To top it off, the U.S. has put pressure on the IMF, World Bank, and Inter-American Development Bank to speed up $12 billion to them in the next few months. Self-reliance, this is not. So not libertarian. And it may not be enough to solve Argentina's problem. But we really have real plumbing issues here, okay? So we stand ready to purchase Argentina U.S. bonds, and we may be unconditional. And the guy says here, that is, for the lack of a kinder word, unique. It's not unique, it's insane. That's the kinder word. Okay? So Treasury lifelines come with extensive conditionality, intrusive scrutiny, and pledged sources for repayment. The last time the EFS was used for a foreign partner in a significant way to provide a 20 billion credit line to Mexico, the terms were demanding. The U.S. got Mexico to agree on concrete policy targets, provide details about the U.S. financing, and to grant Treasury a veto over any disbursement. None of that for Argentina. Free. Go wild. You can stop and read this. I just want to point out, they're saying now the EFS to directly buy pesos no longer seems to be under discussion for the obvious reason that exposes ESF, us, to if Argentina's defense of the current ban falters after the October 28th election. Yeah, down 30%. Give them 20 billion, let's lose 8 billion. And in the first paragraph, they say, what does the EFS actually own? So it has 21 billion in liquid security, 3.5 billion in yen, 2.2 billion in euros. Could be deployed, but that's it. All right. So the EFS pool of foreign security is less than Argentina's 32 billion in gross foreign exchange reserves. Right. There's no way this works. So they say, first sentence, unconditional bailouts incentivize bad policy. This is what it is, okay? So there's no way this. And listen, this is just not about Argentina and the U.S. Currency traders are the best traders in the world. They have to be. They have to know everything. They have to know all five factors that affect the markets because it's the currency market. They're also a huge market. You have to be good to be in this market. And these guys smell blood in the water. And if you don't think they're looking at that 30%, so they got two things they're looking at. Is Milei going to get reelected on the 26th of October? Odds are no. Okay. What happens? Do they break it before the election or after the election? If they break it before the election, the peso declines 30%. The inflation rate in Argentina does what? Straight up. Okay. If it happens afterwards, same thing. They're stuck in this thing, and we are giving them help that is totally negative for the United States of America. There's nothing in it for us other than this is Trump supporting a libertarian. Tell me in the comments and like and follow.